and welcome to Pitt Street Research. My name is Stuart Roberts, and I'm one of the co-founders of our firm. And joining me on the morning of Thursday, the 15th of May 2025 from Perth is Mr. John de Vries, who's the CEO of BlackRock Mining, ASX BKT. John, a very good morning to you.
Good morning, Stu, and it's a lovely morning, and thanks for the opportunity to come in and discuss where we're going with Mahenge.
So the Mahenge Graphite Project in Tanzania has been in the works now for 7 years at least. You've made some significant progress just lately. Announcement that TANESCO, the state-owned power company in Tanzania, will now supply power to Mahenge. Read it and weep if you're an Australian power consumer. You can get the power at about 8 cents US per kilowatt hour, which is amazing.
Yeah. So a couple of things about TANESCO and how that all works is Tanzania has been spending very heavily on infrastructure over the last 4 to 5 years. And the key part of that is the Geoleston Area Hydro Scheme. Right. So that's a 2 gigawatt dam. So with the 2 gigawatt dam coming on top of their existing generation capacity, the country is about 1 gigawatt long on power. So not only do we have power at the right cost, but it's reliable power at the right cost. That's the important part. The next element on that is what we've done is really different. It's a genuine public-private partnership, and it's not something that TANESCO has done before. It's not something that's commonly done. So when you look at these projects and you look at just a dedicated power line to your mine, and then you look at a high voltage line that we're putting in, there isn't really a lot of difference in capital. So what we've done is put in a 220 kV line that goes from Ifakara right up to Mahenge and a substation at Mahenge. And what that does is puts enough power in that line to offer the region of Mahenge an industrial footprint, or at least access to reliable power for industrialisation. So if you think about what we try and do with these projects as a public-private partnership, but also leave a lasting positive legacy for the community, access to power to allow them to continue to develop the local and the regional economy. Pretty big milestones on the way through to doing what mining should do, which is bring benefits to all our host communities.
Right. It's impressive to me looking back. You were the first person to teach me about the Equator principles, if I recall. So best practice on ESG. There's a number of things you need to do, and it's in a document called the Equator Principles, which you've read and then implemented as you've prepared this project.
Yeah. So because we've gone down a process where we've used debt funding and IDC and DBSA out of South Africa and within Tanzania now CRDB, we've got to work to world's best practice, not necessarily practice in Tanzania. So when you're dealing with those debt providers, they elevate you straight away to the Equator Principles and also the IFC performance standards. And your independent technical experts, these are the guys who advise the banks, will spend a great deal of time looking at what you do and looking at your business plans and all your management plans to make sure you are compliant. And there's all sorts of things get looked at here. It's noise, dust, tree species, biodiversity plans, all those things go into the mix. Because what they're really trying to do is to avoid the sort of projects that attract very negative headlines. So again, this is about reinforcing a win-win for the community, a win-win for the nation. And the power line's a great example.
Absolutely. So this project is now more than shovel ready. We've got our special mining license in place. There was recently an issue which has just been sorted out. The stocks come out of suspension. We've got our power. We've got the vast majority of the debt in place. And now what I see is that POSCO, a big partner of yours in Korea, is greenlighting a major intermediates plant, bigger than anything the world has seen so far. That puts you in a very good position to be a supplier of material for that intermediates plant there.
Yeah, I guess two features of what the POSCO intermediate plant talk about, and I just sort of maybe pull up that slide from POSCO. Really, what does POSCO mean? And what's the meaning of this POSCO intermediate plant? within the graphite sector, there's been a lot of rhetoric about we want to go supply anode, and there's been a lot of work by junior companies, some of our competitors, as to what they can do to get into the anode supply chain. And I guess that strikes two things. Is one, they've talked about it a long time and yet to get to an endpoint, which does talk about this is a pretty hard spot to play in. The other one is, how do you do it at a scale that you're commercial against Team China on day one? And this is really where the arrangement with POSCO leverages a whole bunch of things. Firstly, because it is 30,000 tonnes of our product. It allows us to go to full commercial scale, 90,000 tonnes of total production on day one. So tick, we've straight away got economics of scale. But also it gives POSCO economics of scale. And the fact that POSCO have been in this space now for the best part of a decade, they do understand what needs to be done. So they have the IP needed to make this successful. And to me, this talks about what we've always been trying to build out here is an overview of a supply chain. And supply chains are a team sport. If I was to use soccer, you do not put 11 goalkeepers on the ground, on field.
Right.
You need people who've got different skills who can play different positions and pass the ball. And that's what a supply chain is about. It's about building up that team of people who can pass the ball, take it all the way through. And there was always that gap here where we had the intermediate plant, that SPG plant, and POSCO stepped in there. And you can sort of see the comments coming out of POSCO is, they've announced it, but there's been a long bunch of people knocking on POSCO's door to say, we really want to engage with this. The other thing is, if you look at the cost, 277 million, these things don't come cheap. And again, as a small junior company at the development end, trying to fork up another 277 million to do something that I don't know how to do is probably not the smartest way we can go about doing business.
Right. So a comment from the POSCO folks, they've been deluged with OEMs looking to get material from this plant. So clearly the timing's right. That then brings it back to your work in Tanzania. So we've got to close out financing for this project, and obviously that's been ongoing for a while. What's the latest that you can share with us?
Okay, look, we genuinely thought we were in a position to go before Christmas. Turned out there was some administrative stuff that just took forever.
Right.
And we just got caught up with the Christmas shutdown in Tanzania. Through that now, that's sorted. And obviously then the latest thing was the SMLs, and that was all about people looking at some of the older SMLs that were clearly people land banking, and just pulled everybody and said, well, let's just go through everybody and sort this out. So we got caught with that. Again, got through that. We're back in business. So my view at the moment is where we are now is, genuinely ready to go. As soon as we get all the coin, there's potentially a little bit of upside on the debt to work through, and that's not complete yet. But we have the debt sitting there at the moment, and on a current debt and with POSCO there, we've got about 70% of what we need identified. So there's an equity process to put in place that other 30%, and we said we keep going back to the partner process. And again, there's a couple of spirited conversations going on in that partner process that we want to bring to an end very quickly. It's time to get moving here.
Right. Now, what's been impressive to me about BlackRock, and this has been a consistent story for a while now, the flake size that's going to be coming out of Mahenge it's a mixture. You've got fines and you've got your larger flake size, but it's the larger flakes that predominate in this project, and the pricing is held up. Every single data source you look at, your average basket at the moment is north of $1,000 a ton, and that's about twice what your estimated production cost from the DFS. So you're sitting pretty on the economics.
Yeah. Look, being perfectly brutal here is that if this was a typical graphite project where we've got 90% fines, we wouldn't be having this conversation. It would be game over. What makes Mahenge special is we do have that large flake. And even if you look at fines at the moment, they're at decade low. Our basket price at decade low prices for fines is still bringing in $2 of revenue for every dollar of cost at steady state at what we say is a more economic level. We're bringing in $3 of revenue for every dollar of cost. So it makes the project particularly robust. But the other thing that's really important here is it gives us a portfolio of markets. And this is where the portfolio is really standing out. If we were all fines and we were all in on the anode sector, we would have a business problem. But because large flake goes into insulations, gaskets, all those industrial products, we still have a business that works extremely well. Right. So this is when you're going into these, the new strategic minerals. You can generate a headline that says really, really nice, one part of it, but you've actually got to look at the portfolio of opportunities and ask yourself, what's the cyclicity within your portfolio, and what happens when the tide goes out? And this is, as far as I'm concerned, Mahenge is the gift that keeps giving. It's a high grade deposit. It's particularly pure and well sought after, and it's that large flake that gives us diversity across our markets. And that diversity is a massive, massive strength at the moment. And it, gives you an idea of just, when people get into the nuts and bolts here, they're just, they're very, very happy with what we've done and how we've done it and the quality of the project itself.
Right. And talking about these modules, this is a long life project we're talking about once you get it up and running. Not necessarily our grandchildren will live to see the end of Mahenge, but we're talking well north of 20 years, right?
Yeah, look, at the moment, it's a 26-year mine life. It's about 70 million tonnes sitting in the reserve. Probably the best way to look at that is 200 million tonnes sitting in the resource. So over the first 26 years of the mine, we're only using about 1/3 of the resource. And we could add tonnes to that. We could add mine life to that, but it doesn't really change the story at this point. What you need to be doing is getting into production, getting those second, third, fourth modules built, and then look at your resource base and say, where do I go to with this?
Right. And the final thing I know, I've dug out my map of Tanzania here. So here's your plant here, roughly.
Yep.
And it ain't more than a few hundred miles to get to the coast on reasonably good roads, and I think there's rail infrastructure to the port of Dar es Salaam. Then it's off to Asian markets. The location is exquisite.
Yeah. And this gets back to something we've been saying for a while now, is the ore body gives us a revenue line. Yeah, large flake, high purity. That gives us a revenue line. It's the infrastructure that gives us the cost position. And I go back to my early days as a mining engineer. But one of my foremen said to me, John, he said, anybody can break the rock. The art in mining's moving it. And everything since then has just underlined that piece of advice. Access to export markets, access to energy, absolutely underpin where you sit on the cost curve. And Tanzania's actually got, to me, world-class infrastructure in those areas.
Right. Well, John de Vries, thanks for joining Pitt Street Research this morning. Some great progress. Looking forward to a good second half of 2025 once you get the project funded and make a final investment decision and get that mine up and running.
Excellent. Thank you, Stu. And we're looking forward to getting on the ground and really moving this thing forward quickly.
Thanks. Onwards and upwards. And I should disclose, I'm a big shareholder, and after this conversation, I'm going to hold on to my stock for a little while longer.
Well, I'm a big shareholder too, and I'm definitely staying here. So.
All right. Good. Thank you.